Okay, it has been something of a tough stretch lately for investors. Concerns over AI, over valuation and overspending. And then we got the Israeli and US attacks on Iran. Let's get more from Shiraz Ahmed, CEO of Sartorial Wealth. And just, you always like to remind us, you're quants. So you're less interested in price earnings ratios, for example.
Yes, I mean, it's a factor that we look at, but that's not our primary variable.
What are the big variables? Is it momentum is crucial to you?
Yeah, so momentum is probably the biggest one, but not momentum in its generic sense, but we look at momentum, we look at risk-adjusted return, Sharpe ratio, we look at standard deviation. There's a bunch of variables. It's a lot of math behind the scenes, but really it's all about trying to find who's got the hot hand. We want to give them the ball.
As a math guy, this is off topic, what do you think about the rise of these prediction markets? They've evaded regulation. They say, oh, the futures regulators are in charge of us. But people are betting on all kinds of things.
So they definitely are. I don't think that's going to change. Human nature is an interesting thing. So these are ones that we are always watching. And I think it's an ever-evolving situation. So it's one that we have a close eye on.
You've got some ideas for us. Costco, C-O-S-T. What attracts you to that stock right now?
So Costco, again, it's a household name. It's one that most of us know. I know my household tends to go there quite a bit as a shopper, and I can't not spend $500 whenever I walk in there and munch on many treats. But jokes aside, it has been under positive momentum over the last little bit. It had a rough end to the year last year, but since January, it's actually popped up pretty substantially. So it's a name that we like. And as of right now, it has recently scored well into our model, so we did take a position into it.
Let's maybe have a look at a 5-year stock, because it was a darling for a long time. It has that loyal customer base and automatic profits from the membership fees.
Absolutely. And so the membership fees have been increasing year over year as well. And in addition to that, they're also expanding more internationally. So again, it's a story and a theme that we like. It was a darling for quite some time. Last year had a little bit of volatility towards the end of the year, but it's still a name that we like.
It is interesting, apparently, a narrow range of products. And because it's ridiculous. You go into some stores and there's 50 types of toothpaste.
Oh, of course. But it's also one of the few that actually there's a whole influencer movement behind it as well. So that's another really interesting point to note about Costco. If you look on social media, you'll have people that were talking about our top Costco hauls. Oh. I haven't really seen that for a lot of other retailers.
Interesting. It just has that cult attraction. Yeah.
Absolutely.
Yeah. There's a Costco business center near here, and I think it's more wholesale oriented. And you can buy 3-kilogram blocks of blue cheese.
Fantastic.
But I'm just trying to work out how I'll explain that at home, how we'll go through 3 kilograms.
Really like cheese.
I love my blue cheese. Novartis, global pharma company. What draws you to this name right now?
So again, other than the general momentum of the story, overall, again, pharmaceuticals are an interesting play. It's one that has done reasonably well. They've gone through some acquisitions at the end of last year. And after the spinoff in 2023 of their generics business with Sandoz, we like the fact that they're a pure kind of innovation-oriented play. So it's a name that we like. It's been screening well from both a fundamental standpoint, but also from a momentum standpoint.
Maybe we could put up a 5-year chart. I can't even remember. Do they have any kind of presence or drug in the weight loss diabetes sphere?
Not to the most part. They're a lot in cancer, so oncology is one of their bigger areas as well.
Right, and of course, as the population ages, cancer shows up. Yeah. Okay, so Novartis getting the nod there, and certainly that stock has been a winner over 5 years. And then finally, Devon Energy. It's a shale specialist in the US. What does this stock have going for it?
So other than the fact that there is a proposed merger that's been already, at least is being voted on right now, coming up in the not too distant future with Coterra. So that's one that's out there. It's a name, again, that we are liking from a momentum standpoint. They're seeing a short-term pop, just like all energy stocks are right now, with unfortunately due to the conflict in the Middle East region. So it has been a strong performer for quite some time. It was a name that we've actually been in and out of several times over the past few years. And we're back in it again as the fundamentals have come back.
It's tricky, I guess, with oil stocks gauging momentum because they trade on the crude price so much.
Absolutely. And so because of the volatility, that's part of the reason why we were out of it for quite some time. But recently, over the last couple of months, it has started to score better, and our model picked it up as a buy.
And a dividend yield of 2%, is that an important part of your model? Do you like to see a dividend yield?
So we do, if we hold the stock long enough to actually get the dividend. Often we are rebalancing on a monthly basis. So some of these things, if it's a large enough volatility set within a month, then we may or may not hold it for a longer period of time. But we've been in some names for over a year at times. If it keeps scoring well, it's a name that we like, then we'll hang on to it.
And then, so they have a variable dividend tied to excess free cash flow?
Yes. So again, it's one that will jump around a little bit, which is part of the reason why we're not necessarily buying it for the dividend yield.
Yeah.
We're buying it primarily for the price momentum movement.
And what about oil? I know we're talking equities here, but when you look at do you ever look at a commodity in terms of momentum, or is that a different dynamic?
So it's a bit of a different dynamic. Again, it's a little bit different play. We're primarily a long-only equity strategy. However, we are looking at the underlying. So, oil has been under huge positive pressure over the last little bit, given what's going on in the Gulf region. But prior to that, it was actually kind of a flat time frame. So it hasn't been doing too well for quite some time until very recently. But it's a name that we like. We want to have a position in energy going forward, and this is part of our ways of playing it.
And so you do short things occasionally?
So we're not shorting, we're long only. So
okay. Yeah.
We're long only, but this is, again, a name that we may rotate in and out of. And so that's part of our way of doing it. So we don't take any leverage, long only, and we do have a lot of rotation.
You must be tempted, though, to introduce shorting to the model if momentum is breaking down, for example.
So it is tempting, but again, it's a bit of a dangerous game, right? Because there's theoretically unlimited loss with a short. So one of our pieces that we're looking at is perhaps some more on the hedging side, but a pure short is something that we got to be very, very cautious about doing. And again, we're all about suitability and investor benefit.
We'd better leave it there. Shiraz, thank you very much.
My pleasure.
Shiraz Ahmed, CEO of Sartorial Wealth.